Welcome to an episode of Think Different with Rosanna. Today I'm going to talk about the 5-finger fundamentals that I use when investing in companies. Companies release their earnings reports with 10Ks and 10Qs, and they make their announcements in 8Ks. In these reports, there's a lot of information, so we want to simplify. Companies talk about their past, present, and future. So what are the 5-finger fundamentals that I use? Let's start with number 1, earnings per share. Those are the earnings divided by the amount of shares. Why is that important? As a shareholder, if I own stock in a company, I want to know how much the earnings are per share. Net income is important. Revenues are very important. However, I want to know the earnings, the net income divided by the outstanding shares. Very important. Earnings per share. And we want that increasing or at least maintaining. Then you can take that number and you take price divided by the earnings per share to get the PE of the company. I'm sure you've heard of PEs, and we want to have usually lower PEs. Number 2, margins. Margins are important to be increasing or at least maintained. What are margins? You can talk about profit margins, gross margins. They're basically the difference between the inflows and the outflows. That's that spread between those two. We want to have that widen. We want it to increase. We want to increase margins. We want to see companies that are able to streamline their operations, maintain their cost of goods and operating expenses down so they can have greater margins. So we want increasing margins or at least maintaining margins. What's number 3? Cash. Cash is king. Have you heard that expression? Free cash flow yields are what I look at. Free cash flow, that's the cash that's left over after all the expenses and debts or everything's paid for. That's the extra free cash. Free cash flow yields are you take the free cash flow number divided by the amount of shares and you divide it by price. So we want to have a higher number. We want higher yields, right? So we want free cash flow yields higher and increasing. Also, free cash flow margins, free cash flow per share. We want cash. We want to see cash for a company. We want it to be generating money. And that's very important. Number 4, guidance. What is guidance? That's the future outlook of the company. What is the company guiding for the future? What do they see? Are they increasing their revenues, net income, earnings per share? Do they have a positive outlook? Are they seeing an increase in free cash flow or cash? Or are there deteriorating conditions up ahead? As investors, we invest in a company based on future projections and expectations. We want a company that's going to keep growing and having improving guidance. So we want guidance that looks like it's improving. Higher numbers, higher guidance. Very important. Of course, they can always revise it later on, and that's another issue. But this is part of the 5-finger fundamentals, and this is number 4. What's number 5? Strategic planning. This is the company's plans on how they're going to gain market share or diversify and differentiate into different industries. How is this company going to grow? Are they having mergers and acquisitions planned? How are they working to maintain their margins and increase their margins and increase their earnings? How are they streamlining their operations? These are all types of questions we ask. And the company will tell you. So let's look at positives there. Maybe they're going to be acquiring another company in its space to gain market share for inorganic growth. Could they be also doing some organic growth? Those are important to look at, that type of criteria. So 5-finger fundamentals. when companies report their earnings. Earnings per share increasing, margins increasing, free cash flow, cash increasing, guidance increasing, strategic plans. We want to see expansion, streamlining, efficiency, ways the company is going to stay competitive and become a future leader. Is this all inclusive? No, of course not. There's many factors and there's a lot more calculations we can do. But this is the 5-finger fundamentals that I look for when I look at 8Ks, 10Qs, 10Ks that are most important to me.